and it's the one time during the week where you can sort of come in and ask, whatever, and we try to cover it and get answers for you live and in person, versus, you posting stuff in the forum, the help desk, which is great. Definitely a time for you to do that all throughout the week. But also, this gives you a chance to, say, hey, trying to figure this out, or I'm lost on this, or, what about this? And I can go through it step by step and whatever the topic may be. So, stocks, Forex, futures, options, spreads, binaries, Nadex, otherwise, whatever. And it's been pretty good. We've had a lot of good response from a lot of the traders over time, and every once in a while, like I said, we'll make them really, really focused. But usually, Monday night webinars, I'll do very focused webinars and go through different things. I know that we're right next to releasing the stop plugin. We just released the final beta, and I'm doing maybe a couple just word edit changes on that. And then we are going to release that stop plugin that we showed off last week. And the goal was to get it out this week, so we are barely on goal right there. Okay, so let's see here. Which basically means we may end up getting it uploaded like this weekend. But once it's up, then we'll make sure everybody knows. We'll send out an email, make everybody aware, and then go grab it and download it. It'll actually tell you once it's ready for download, because you'll be able to see it. And first off, let's see if I got any opening questions here. And going through, following a couple different things. Looking at a couple instruments right now for trades possibly out of the gate. Never know. All right, might be something right out of the open. And let's see here. Okay, so we'll just pull up the scanners. We'll get those going. If you haven't used the scanners yet, definitely go check them out. We've added a few things to it. We added out-of-ticket window links, which are really helpful, by the way. So you can go here, you can click on this, and it pulls it out. It sort of it gets rid of all the menu stuff at the top, makes it a little tighter for you. So that's a benefit. It's a trade up, but I'll just close that thing out. Looks like it's working, but get rid of the demo trade. But you can use it out of ticket window, and you can use it for the deviations and everything. This makes it a lot easier to pull out different pieces. Okay, so check that out. We're going to update the binary expiration schedule to have the US yen and euro dollar. I know that's in process right now. And we also have the link now to the Nadex rollover and holiday calendar. That's a new link we've added under the scanners. So if you click on that, it'll take you right to the rollover page. So you can say, here's the calendar with the rollovers, when they're going to happen, what the symbol's going to be. This tells you what is everything at currently on Nadex, so what contract is it currently following, all in one place. You have it on the binary scanner, on the spread scanner, it tells you by every instrument. But if you're wanting to just do, like, say, a NinjaTrader update, and you want to update all your symbols real quick, that's the quickest and easiest place to go. It's basically a request, so that way you didn't have to scroll through everything to update your Ninja. And then important Nadex links like the results page for settlements, all the contract specs, what hours are open, and for every market, and then the rollover dates for currency futures. For those of you who are using currency futures, whether like maybe you're just using them for volume or whatever you may be using them for. So we have those on there, and you can use those as well. So just a few new little links. We'll keep adding stuff in here that we find are commonly asked questions to help out. Let's see here. The new volume spike indicator. As soon as we get the plugin released, we're going to release the new volume spike indicator. So we call it Spike Striker, just because it has sort of lightning bolts on there. And Mark put those in. It's pretty sweet as he's helping us put the pieces together. And so that's going to be the main focus next week once the plugin's done, is to get that rolled out. So part of the reason it's taken a while, we got to make sure it's stable. It's worked pretty well. We have to go through like multiple platforms. When I say platforms, like people have Windows 95, 98, XP, 2000, all the way up to the most current version of Windows 7, Windows 8, and so we have to make sure it works on all those versions when we release it. Otherwise, you can get what's called a a silent kill on Ninja, so people don't really realize how much you have to do when you do this stuff, but it'll just like walk up your Ninja. And so, which is obviously very frustrating. So we want to avoid that, and so that's what we're doing. Is we could release it now. I mean, it works, but we haven't tested it on all the platforms. We want to make sure it's working on all the platforms to help you avoid having to deal with that kind of frustration. And let's see here. Okay, so we got that one up. I'm going to look at one more chart. I'm going to go over, just have a little variety. Okay, so I got a couple charts going on the side here, just trying to see if we got anything. And then one other set that I often am looking at. And that's just me following the potential gap fills and all that stuff. But it looks like overall, I mean, we're not getting the direction at the moment to confirm running after those yet. So like I said, I'm watching them. If we do, then yeah, we'll run on them. And I like gap fill trades, but you gotta really, just because there's a gap doesn't mean that there's going to be a trade. And a gap simply means the market opened higher than it closed, therefore, you know, the expectations that will fill that gap. And when there is a gap, then you got to see, is there a binary that's available? So what we could do is go through how I find those binaries while I'm watching for other potential trades over on the side. So if I'm going to look for a binary trade, that's what we'll do. We'll go through on the gaps, and let's open up the deviations on the side here just to make it simpler for us. Basically, we'd be looking for the S&P to retrace back down to 1832.5. Okay? If we're going to have a gap fill, because it means we think it's going to go back to settlement. It opened up higher than that today. So right here we go over, now we're going to find the S&P, and just to make it easy, I'm just going to do like 5 and 95. And then I don't really need weeklies, but I probably do want everything for today. So I could do dailies and intradays. Obviously, I do need to make sure I do weeklies on Friday because they expire the same day. And then I go down to, what I personally prefer to do is go down and find gap fills that are at 415, because sometimes it can take all day to fill those gaps. I'd say at least 50 to 60% of the time they'll fill in a couple hours. But about 30 to 40% of the time, the ones that fill, I mean, they, 1 o'clock, 2 o'clock, I've seen them fill like at 4 o'clock. So having that time, puts that in your favor. But if we're going over here and we're targeting 1832.5, then we go, okay, what would 1832 cost us? And then, I got in the money selected, I think. There we go. So 1832.5. This is a big mistake. People we put on it in the money, they'll leave it, they'll forget to go back. If you ever think something's not showing up, just hit reset filters and start over. It'll save you a lot of headache. So 1832 would be acceptable. It's about the closest I'm going to get. And so I could open that ticket up and put a little check mark right there just to hold it up. We have that pin browser program inside of our form under structure trading computers. It says cool free program that allows you to pin windows on top of anything. Now I don't lose my out of ticket window. So if you've ever done this and like all of a sudden your tickets are all disappearing from you and it's sort of annoying. Well, by doing that you don't lose the ticket. All right, and then we'll go over here and I'm just going to get ready. I'm not even saying we're taking them yet, but get ready. So now we'll look at Nasdaq 3565. So now I'll go find the 3565. So we got 3564 right there. Okay, so we got that ticket. So if I decided that I wanted to take that, there may not be a good 1-to-1 by the time it does trigger our price. And if that happens, that's okay. I got to be patient whenever there's trades, and I got to take the best trades. If I just take every trade just because it fires off, then I'm, really just asking for a world of pain. Oh, see, and then I didn't click it, and see how it disappeared behind me. So I'll bring it back up, but now I'll pin it to the top, and now when I click, I won't lose it. All right. So now let's go over. We'll check out the small caps, 1154.9. So go up here to the small caps. Down here to the small caps. 1154.9. Really, 1156 is a lot more accurate. It's definitely going to be too expensive. But unless you get a major market run up and it comes back. There's more than one way to do this, so I'll show you a couple different ways. We'll pin that up. And then on the Dow, so now we're starting to get the market action breaking down. The Dow, right here, we're going to get 16,407. So if I go up to the Dow, 16.4 is about as close as I can get. So we can bring that one up. We can pin that one on top. Now we have all four of them. Okay? And so, except there's more than one way. Well, somebody just took that book out. There's more than one way to do them. And let's see here. If we think they're going to go down, actually hit their price, which now I'm more concerned with what settlement is, so I can leave the settlement up and have all four tickets up. Okay? So, if I'm thinking the price it's going to hit is going to be 35.65. I could sell and scalp this thing for 10 or 15 bucks. I mean, that would be a possibility. That's still a really tight trade. So, let's see here. I'm just watching them. Let's see if we have any possibility, if it's like even a good idea to follow along on them. Not that they're, I mean, the market, I basically have everything getting saying right now the market's short. But I don't just want to blindly fall in. It's so easy for it to pop down, pop up, pop down. And Mark, can you confirm if we have V spikes going on any of the indices for me? Just you get your charts up. I don't know if you're on there. But yeah, if we have added some updates on the toolkits. I mean, not in the last week, but in the last several weeks. So, you know, it's always good just to, and it's not updates so much that you'll have to go add a new indicator, but or we might clean something up. So it's always good to update your toolkit every few weeks. I do not recommend ever updating your toolkit at the beginning of the trading day, because if you have any tech support issues, then you're down for trading. Let's see here, 35.60. Okay, so there are other possibilities. I'm watching right now. It's just these things are pretty much right at their gap fills. I mean, they got a few points, but one of the things we can do, this is also sort of fun and interesting. You can go over here. You can pull it up. I'm just watching this while I'm waiting on something else to trigger off. But let's see here. We can go, say, to NASDAQ. Okay? We can go to simulate, and I could say, well, what would be the best payoff if the market hit 35.66? And it'll actually show me the highest payouts if the market hit 35.66. So if it dropped down, would I make anything? So if I try to get out just 6 points lower, and what it's giving me, simulated close price, simulated P&L. And wouldn't really make of anything. Basically, you'd just be paying bid-ask spread at the moment. So it's just not that tight of a move. Like 64. Buy back at, 60. Let's see, what would be 35, 60. We're at 66. Okay, 60. There we go. This thing will update. There we go. Okay. So in the current contract we have about 11 bucks, 10 bucks, 10 bucks. Obviously, the further out you go, the more you're going to make. So there actually comes a point where you're not going to make more. It starts breaking down. I get 35.44. Notice how the reward. This is the risk-reward ratio. Okay. So like, selling the 43, I'd make actually the least amount of money for my dollar. 0.13, 0.17, 0.21, 0.19. So these are the sort of the range right here. These are the four binaries I'd be interested in. Now these are out of the money. Advantage, they have less risk. Disadvantage, that market has to move further. So you always got to balance those two pieces together. And what you could do to help yourself out is you could go in, and like I said, I'm just trying to give you a little, this is multiple tips and tricks on what to do here. But we could, let me pull this off the screen so I can look at it. We can go in, and what I'm going to do is, so I don't have to go back and forth between the settlement page, I'm actually going to type in that target in my settlement sell side simulator. So I'll have it, and I'll also be able to monitor best risk reward ratio. Okay. And settlement action on Nasdaq was not quite 35.60. That was just the only one available. So we got 35.65, and then the Dow settlement is 16.407. So 16.407. And then settlement on the small caps. Settlement is 1115.1. This is something that I was using a lot last night. I was trading with another trader, and we were using this to figure out of the like 3 strikes or so that were possible that met our criteria, which one was definitely the best one to choose. And it helps out quite a bit. I did 1190. Shouldn't say 1190. 1154. There we go. Okay. And let's say if I just want to get rid of the 415s, like I'm only going to trade the later ones. So if I was going to do that, I could bring this down, or bring this up to a day and just push this out a few hours. That'll basically drop my intradays off, because they're 1 hour and 12 minutes to 6 hours and 12 minutes. Now, I can look at this and go, okay, which one do I have the highest payouts on? Okay, highest payouts are here, here, and here, and basically this is my range, really all these. That one I only make $1.50 on. Okay, so this is important. Like, let's say 0.12 looks okay. Well, 0.12 is also okay here, because I invest 35 to make 750. Well, this I only invest, $8.50 to make $1.50. Here's the problem: is that didn't cover my exchange fees. So I need to be able to at least cover my exchange fees and make a profit. So that one's not good enough. This one, hey, it has the best payout for that small move, but it's still only $6.50. So really not enough to justify fees. And then this one, 9.5, 10.5, it's okay. But what I really prefer is this range right here. Like these two. They're basically just the highest dollar payout, and they have a good premium payout. So it's a combination of risk reward and dollar amounts. Don't just think higher reward to risk ratio is a better trade for me. I also want to look at and think, well, what does that actually mean in dollar and cents? Because I'm going to give up a couple bucks. Okay? So we sort of found the two. We can highlight that. Now that's done. And these are all steps you can go through, and this is sort of like, what should you do 30 minutes before the market opens? Go in, find out what the settlement price is, check out what those strikes would be, highlight those, fill in your price. By doing all these steps right here, this could help you be a lot more prepared on putting the trade in. Any questions on how to do that so far? Got it pretty good? Makes sense? And it helps you from flipping back and forth by typing in the price. Yeah, see, we're not really making any money over here. All right? So it's so close. There's just not really a profit to be made. So Nasdaq really isn't a trade for us, because if it moved down just a few points, that wouldn't be enough, and to make a profit. Notice how, like, right here, the difference between strikes is 4 points, and that's why it's saying you're really not going to make anything if you trade Nasdaq and you try to get out 4 points lower. So if I'm like, you know what, that just really isn't working, I'll just shrink the Nasdaq up. I can always bring it back later if I want to, but now I can shrink it out of the way without taking up space on my screen. Okay? And this is something you get more and more and more used to the longer you play with it. We go down, we look at the Russell. We have a strike of 1154. That's a decent. That's 22 bucks. Yeah, this one's 1-to-1. That's pretty good. So we're risking 17 to basically make 17. That'd be without a stop loss, and I'd have to move further. I'd have to move 2 points lower than the low, but that would probably be one of my bigger picks right there, just because of that fact that it's a 1-to-1. And then let's see. We got the Dow. So the Dow we're shooting for 16,407. What I don't like about the Dow trade here, one, of course, we're not making anything on the trade, so that's one reason to not be impressed by it. Two, there's just not really a great strike, so I have to go like seven ticks lower than settlement to even start to play. So the Dow really doesn't have anything for me on a gap fill. So sometimes people wonder why we only send like 1 or 2. Well, sometimes it's just what's available on the gaps. So now we've narrowed down basically if we are going to trade this gap fill trade, what market are we going to trade it on? It's not going to be the Dow and it's not going to be the Nasdaq this morning. It's either going to be the S&P or it's going to be the Russell. So looking at the two, the obvious choice to me is actually the Russell, because the payout, the risk reward, actually has the best setup. So if I'm like, okay, not going to be the Nasdaq, I'll just get rid of that ticket. Not going to be the Dow, I'll get rid of that ticket. And now I have a few choices over here. This one makes me 15 bucks if it moves down. This one makes me 15 if it moves down. This one makes me 13.50 if it moves down. So my range in that was 17. It's just starting to move back down. So I got to choose basically just which one I want to do. They both have, like I said, about the same profit potential. And your advantage and disadvantage of each one. What is the advantage and disadvantage? Yeah, the advantage and disadvantage of each one on the trades would be, if I choose, say, the 1156, okay, it's going to lose value slower because it's closer to the middle, okay? There's sort of two things that impact the price of a binary contract. And we can put on a few examples and actually show you, but that might be a way to do it. Let's see here. So let's say I had up this ticket and this ticket right here. Okay, so these are the 3 tickets that I highlighted below. Well, if I put this trade on, my risk is really low. And that's the 1150. Actually, that's not the one I want. The 1152. Okay. So we got about a $15 risk, and we got about a $20 profit potential if I did that trade. This one, you look at it, we have about a $24 risk, and we can make about 22 bucks. So we're still pretty close to 1-to-1. This one right here, I have a 60, or basically I have a $38 risk and about a $22 profit potential. So not quite as good on the reward to risk ratio. These are all out of the money binaries. There's only a few circumstances where I'll actually trade the out of the money binaries. And so I have to choose. This is sort of the hard part. I mean, once we've done all this and we've gone, okay, these are the only 3 strikes that are potentially acceptable for me, I got to choose which one of these 3 do I want. And I can go, you know what, I like the low risk. I know it may have to move a little further for me to get filled. And that's what you got to deal with. But I know that no matter what, it doesn't have to, if it fills the gap, then I should be able to make my 18 bucks. And I'm risking current price like 16 bucks, 17 bucks on the trade. So that's really not a bad deal. This one, 25, risking, make 21. So why do you think, this sort of a pop quiz question for some of you more advanced tickets, why would you, this one you're going to make more than a 1-to-1 ratio. Why would you choose the ticket above it as the ticket below it? What would be a motivator for doing that? Why would you choose 1154 versus 1152 when you could make a little bit more with 1152? Yeah. So why would you choose to sell? And this is why I want you to actually pick something up here. Why would you choose to sell the 1154 over the 1152? What would be the advantage of doing that? Because either way, when this thing moves down to 1154, we're getting out. So okay, yeah, it's closer to being in the money. I mean, it's obviously it's out of the money, but it's closer to being at the money, I guess you could say. So it's not in the money at all. These are all out of the money strikes. Okay, so they're out of the money because remember our risk is lower than $50, which is a sort of just an easy way to tell normally that an out of the money strike should have a risk lower than $50. So they're all out of the money, but they're closest to being at the money. And so the closer it is, the higher probability I have of getting that trade filled and actually getting my profit. Now, what's the other thing? What is our target price on the Russell? So our target price, remember, like was settlement. We got that over here on the deviation levels, like 1154, 1154.9. So right around there, right? So if that's our target price, then I know that if the market hits that price between now and expiration, I can get out for, about $50 plus a little bit of spread. Okay? But what if it hits 1154 in 5 hours? It's still going to be worth about $50 if it gets there, right? But what if it hits 1154 in 4 hours? Is 1152 still going to be worth 65? Probably not, because it's out of the money and more time has passed. So that one rule, I always go back to, that's your biggest edge in binaries, is that you can count on, is that a strike will be worth, an option will be worth $50 at expiration when the market hits it. So this is definitely my best strike right here. Does everybody get that? So now I could also go and go, you know what, this is 32 risk for 2650, that's 1156. In my opinion, that's even better because, if it falls to 1154, I'm making about a 1-to-1. But as time goes on, I'd actually make more because it'd be in the money by the time it got there. Whereas this one, this out of the money, I really have to depend upon it getting down to that price for me to have a good trade. Yeah, so if we wanted to place one of the trades, we could even do a series. This is also a good way for you to test. And, you can do this in demo or whatever. But you could go in, update all your prices, place the order, put them in there, and place them all. Now we got the 1156, we got the 1154, we got the 1152. Like, all those are firing off, okay? And now that I've fired them off, I can do whatever I want with them. But I'll move them down. We'll go back and look up at, are we stuck or open or filled? Okay, we got filled on all three. We're down bid-ask spread basically on all of them. That's normal, okay? So, yeah, the advantage of 1156, Mike, yeah, that would be that, hey, if we're going for 1154, that thing gets in the money at all, and it's closer to getting in the money. So what if it doesn't get to 1154? What if it just gets down to 1156? We close that thing out. We only make like $17 on it, but we still could close it out. So I want to buy it back when it gets down to that price. There's a couple ways I can do that. 1154, if 1154 is my target, okay? So we had the target price, like I said, of 1154. This one's pretty easy. I can go in here and I could put, buy back at, say, and we actually even have the price in here, right? This is 53. I may go for 57. Right there. And gotta flip it. So you either gotta, if you're gonna do this where you click the ticket and reverse it, you always have to remember to reverse it. If you're not, if you don't want to worry about making the mistake, I highly advise you just go up here and just click right there. What it'll do is it'll fill in the ticket in the opposite direction for you. Buy one, okay? And then I'll put, say 57. Okay? And now it said I could put it in at 54. I like using 57 because what if it hits 1154.3 or whatever. But let me see here. Pull it back up. Hit that ticket. So it said, hey, this basically estimated it could be at $54, $53 if it gets down there. So, I mean, if you want to go for that, yeah, I guess you could. We could do 54. And it'll update live of what it estimates the price will be based on how the binaries are being priced live. So we'll put that in there. That's a place order. That's a take profit on that. Okay? To buy that contract. And you'll notice up here at the top, the trade tracker will link the order together. So I know I have one on that, but I don't have a take profit order on the other two. Now, I don't really know for sure. I mean, I know, like, if it hit right now, I know what that one I know because it's at the money. I know it's going to be worth $50. Okay? Yeah, Mark, go ahead and send that. So I know it's going to be worth like right at, $50 on the trade. And so, yeah, we can sell it for currently, $78. Now, the other two, I don't really know. And I'm not suggesting you do all three. Remember I said you should demo this, okay? Depending on your account size and ability to test things out. The other two, I know that this will be worth, if I got 1152, here we get back to that strike. If it hit it right now, it'd be worth 66. But I don't know if it's going to hit it in the next 5 minutes. It may take an hour. Okay? So this is one of the new things you'll be able to do soon, is I can go in up here, and where this has convert to virtual stop, okay? I can click on the small cap 1152, and it's pretty cool. It'll actually like just make it a virtual stop for me if I click this little button right here, or I could, click this button. So either way. But now I have a stop order. And my target price, again, we got that target price. Let me lock that one in. Go down here. Try not to scroll too much, make you seasick. But we're targeting 1154. And now I'm saying buy it back at market with a 10 tick offset, okay? But if you're going to buy it back, I don't want to buy it back for like less than what, okay? So I'll show you this up here. So if we sold this contract at 1159, right over here, the 052 contract we sold at 8150. Say, well, I had about $20. I really don't want to buy it back. I want to make at least a little money. Like worst case scenario, I want to be able to buy this thing back for, we'll say 70, okay? Hopefully better. But at least 70. So that way, if the market, like, it's just really eroded time, it's not going to submit my order except for it'll be 70 or lower. Now, if the market's way down and 70 is a better price, but the worst price it'll submit my take profit at is $70. Okay? But if it can submit a better limit order for me, like, let's say the market's down at 50 or whatever, or 55, and it can submit it 10 ticks above 55 at 65, it'll submit my order for me. And we have an explain feature where you add in, and it actually tells you that when the indicative index hits 1154, automatically submit a buy limit order for one contract doing many of the following. Either 10 ticks above the current ask price, as long as the ask size reaches 5 or more, meaning there's liquidity, okay? Otherwise you just get nailed on stuff like that. And then, or at 70, when the ask size reaches 5 if it's not good enough. And then we'll hit just activate virtual stop limit, and now that ticket will actually work. And it's not working on Nadex, okay? It's working on your computer, okay? So and then over here we can do the same thing. And we click over here, we go, okay, now remember I said there's two ways you can either click here. I think using these little buttons is the easiest, and it's gonna make sure you don't mess up. But remember, we sold the 1156s. So right there, we sold them for $58. Okay, and hit buy. Now again, I know that if it hits 11.56 right now, that it would be worth 41.50. Okay, but I don't know if what it's going to be worth in an hour, 2 hours. Okay, so I can use convert to virtual stop limit. I can put in that target of 11.54. Okay. So what the not target, but trigger price of 11.54, and then I can have my worst limit be, well, if I think it's 41, and I sold the thing at 58. Like worst case, don't have me buying back for less than 50. Okay, so if it goes down there and the buyback is 50, you know, what if the buyback is like 59? Then I don't want to buy that thing back at that price. I should have no problem getting that fill or getting that price when it gets down there. I just want to, and you don't have to use worst limit, but it does sort of protect you because it makes sure that you don't, you know, what a worst limit means is when you submit my order at market, it better not be worse than this. And if it is, just have it working, and I'd rather not get filled as get a worse price than this. So, that's probably the hardest part, is sort of determining what that worst limit is going to be. Now, you don't have to use it. Notice that's not highlighted red. You don't have to use it. But by using it, you're making it to where if the market dries up, there's no liquidity, you know, if it didn't move as far as you thought, you can just say, this is the worst limit order I want you to submit when it gets there. And then I'll just hit activate virtual stop. Now it's working for me. And so now, not only can we use virtual stops for entries, like we were talking about a lot last week, okay? Like when a market goes above a price, buy it. But now we're also using it for take profit. And because a lot of times we think about using limits for take profits, right? So, you know, we submitted that limit over here where we said, hey, buy back at 54. But maybe we don't know exactly what price the binary is going to be at when it gets to the price that we're looking for. And so by using this, you could actually basically say, hey, hit this price and then submit my order. Okay? And so they're moving down. We're all, you know, we're doing good on all three of them right now. Within the gap fill, and doing this so early, are you concerned about a market direction change? On a gap fill, I am expecting often that the market will, and I'd say more often than not, the market will hit the gap, the settlement price, and very often it will bounce off of it. Okay? So it's moving. And Mark, did you get that? Were you able to get that off? We got that out. Let's see here. We still need a little bit more. Obviously, we need still be another 1.5 before we really start taking our profits. But we are up on all of them at the moment. Knock on wood, right? Don't speak too soon. And basically, I was just watching for market oscillation in the morning. So, and I wanted to see confirmed down move before I hopped in on them. Alright. So that's that trade. There's really nothing left for me to do. I'm done. I mean, I can walk away. Literally. I can walk away. Which is nice. You know, time to go to work, whatever. You know, time to pay attention to your job again. Whatever, because there's, like I said, I can't control this. I mean, I could decide just to get out early, but I can't control whether or not the market's going to move down another 1.5. On, you know, what did I look at to confirm the down move? I mean, there's a lot that I look at. I'm looking at just bars and what direction they're closing. It's a style thing. Trying to figure out the best way, the easiest way to accurately explain it. But I mean, I noticed that we had some of the indices already heading down. We were, but the bars were like in a negative pattern on Apex, on some of just the directional moves. And here, let's see. Let's open this one up. Let's see. I don't necessarily mean like you don't have to necessarily have an Apex short to do this. Okay, on Apex, one of the things I tell people, hey, be aware of is there a gap? There's like 4 or 5 things I say to be aware of. One of them is there a gap? And just because the gap effect is very strong, it's a very powerful force. Markets like to fill gaps. So we're getting there. And so like here's the Apex. We're getting that short right there. And so I mean, you could have taken it much earlier, but it was oscillating, and all of a sudden I start getting that tick, 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 and I'm like, okay, let's take the trade. So see how this was sort of choppy? We start taking off. So just, I mean, even just the bars themselves without any pattern on them can be really helpful. So you'll see these are moving down and it's waiting for that. Now, interesting factoid on here or whatever, it is actually trying to, we are using the indicative for the trigger price. Okay? So the indicative can be a little bit delayed, which can actually be a benefit. Because think about that. If we're going to take profit when it hits 1154, let's say the market's really at 1153.5, but the indicative just hit 1154. All right? Then we'll actually get a little better rate. So it's like you get a little worse rate, like if you're getting in, you make sure you get a little better rate if you're getting out, using it for a take profit. And make sure you just don't get triggered in too quickly. But I'm letting these play out. I know everybody's glued on these right now. Yeah, so I'm looking at, there's the Russell right there. There's a Russell chart, Apex Russell chart. That's a short entry. And even I was looking over at Brian's chart here in the Elite Trade Room, and he had the DAX up. It's going short, short, short all morning. It pulled back. He got this long apex, didn't fill the trade, and we just started getting down bars again on it. So even the international, you see there, pulling back. So like I said, there's just a lot of little pieces that added up to good possible trade setup. The gap trade itself is very easy to do. It's a matter of your ability to correctly, and most of them fill. If you just did every gap trade, most of them do fill. But the problem is, even though most of them fill, do they have the actual, how do I put this? Do they have the actual distance for you to get a decent P&L? And that's not always the case. So you have to rule out the ones that didn't. And then the next thing you have to do, this also helps, by the way, by letting the market pull up a little bit. Sometimes you can get better fill prices by letting it pull up and then oscillate back. And then the other thing that can be really helpful is just watching the price. If things not moving down, I'm not going to sell it. So I'd rather give up a little bit of profit by waiting on it to get there. And sometimes I'll actually make more money by waiting on it to move down because it moves up first and then it starts moving down. And so I actually got to get it. I actually got to sell it at a higher price. All right, so while those are doing their thing, they're getting pretty close. Let's see. Might be a little late on this one. Yeah, we're in the middle of those. Okay, we'll look. We'll see if there's a decent strike. Alright, get rid of these for a moment. Alright, so we took profit already on our 11. Which one we take profit on? 1154. Yeah, so that one already took profit. So one of them down, 2 to go. And basically what's happening is it's just trying to get the market to move down a little further. We are getting a little velocity spike war here. This is a nice thing to see if you have an Apex chart in the elite room, elite charts. See all these really fast bars? I mean, market flying down, boom, pulls back. But then we get another one right there. So there is a war right at this level. Okay? And if we get really specific, it's really between 1154 to 1154.9. Okay? So if we're watching that chart, there are a couple, and I'm trying to go through like all the reality of trading. I mean, everybody loves the perfect little system, but just go through the reality. If we're watching this, I'm going to be pretty cautious because all these velocity bars spiking up. And so, I may literally go, if this thing gets back up to 1156, I'm out. I'm going to give a little room, okay? I'm not going to let it run all the way back up, but I'm going to be cautious on it. And there it goes. Okay, so now I just fired off both of those. Bam, order received, limit orders, boom, boom. And it'll refresh there. Got that one. Sweet. So, which one do we have in? And it looks like we're out of both. So, let's see here. Let's see. I want to pull up for A team, right? I gotta love it when a plan comes together. It's not that they always work. I mean, y'all know that. But, I mean, you see it was very methodical, and that's the big piece I want you to see is I'm not just randomly going, I'm going to play grab fill. I'm going to grab this. And so, to do like a order history snapshot on these right here from this morning. There's my 1 a.m. So you can tell I was trading last night. Over and over and over. On my phone. Let's see. I love trading on my phone. This is like Android. But what do we got? Okay. Trying to get where we focus right on these trades. I'm trying to zoom in on it. Okay, so the only thing I cared about are the filled, not the cents. Okay. So I got a order filled at we're gonna make the contract wider so you can see it. Okay, so I sold the 1156 at 58. I bought back the 1156 at 41.5. Okay, so not a massive profit, but what is that? 40, 51, about $17, $16.50 on that trade. Okay, I went in on this one right here, and I got filled at 71 on the 1154. I then was able to buy back at 54. So 71, 54. See, 64, 74, like $17 on that trade. Then over here, I went in and I sold the 52 at 81.50, and I was able to buy it back at 64.50. So, what is that? 74.84 minus the few, like about $17. So we got about a 1-to-1 on two of them. Not quite the 1-to-1 on the other one, but it was closer to, the money there. And now, $50 or whatever, we're bringing home. So that pays for dinner tonight, right? And so I mean, that's just one trade system, one signal system that you can do. And we try to send out some of those over on the P3. And we may not send all. I may not send all three contracts out. That's a little ridiculous, and it makes it confusing for somebody to be able to manage that risk. But I know some of y'all joined me on all of those because I saw orders flying off. Okay, looking back over here. But the big thing that I want you to notice is I don't care about the apex. If I'm doing this, okay, and it sounds funny, and we have other strategies we're going to be sticking on these bars too. I don't care about the apex pattern. I'm just looking at the bars. Okay, I'm just looking at the direction of the oscillating versus moving. So it doesn't like you could literally remove the apex pattern. In my opinion, for this gap trade, it wouldn't matter. Okay. So I don't care if it says long. I don't care if the apex says short. Right now, my only focus is this gap trade. And if it does say long and I have an apex long, I may actually back off that apex long because I am expecting a gap fill because the majority of gaps do fill. But yeah, I mean, we can go and we can flip it and it may actually turn around. Let's see here. What were you saying the issue? I had the error happen to me. See what just happened to your... right there. So one of the things that you want to do is just make sure everything's working. But yeah, I mean, it's looking good. We had a short, everything lined up. It's still going, but it's backing off. So let's see here, and trying to see anything else. But I mean, that was that trade. We had another one over on US yen. We just didn't get to it, and because we're doing all this at the same time. It's hard to talk and trade and place trades. But let's see, there might still be value. We'll see. I doubt it. What do we got? Let's bring this down. The ideal strike would have been a 104.99. You could still do 104.94. Right there. On this trade. If I'm doing this, I'm going in. This is not my ideal setup. I would have rather have had the 104.99, which is where I got the signal at. Part of the reason is the amount of money I can make. I want to really make about, and you'll see this when we start doing the predictor time scalper stuff a lot more. We're really going to be targeting the goal of making $15. Okay. So with this, and basically the target is I'm trying to make like a 5 tick move. That's it. So it's actually, the predictor is what predicts the time to use the time scalper. All right. And so when that fires off, I go in, I put in my take profit, and I'm going for one strike. So if I'm going for 15 bucks, then that means, you know, I sold the thing at 20.50. I usually want to buy back at 5. The problem is, I'm not going to get a $5 buyback. I mean, here's all the strikes. $8 the best I could get on a buyback. I'd have to move 10 ticks for me to make my money. So I literally right now would have to settle for a $10 profit. I don't like that. And so I'd rather have a better strike than that. You know, so you could go and go, well, what about 35.23 right there? There's about 13 bucks, 59.44, 60.44. You know, that might even be better. But for now, I'm going to go ahead and at least set a take profit on this one. Buying back at just a 10, just trying to, you know, follow my rules there. It looks like 9. Let's see what I got. 104.94. So basically 9.50 right there. And if I want to test out my theory is basically based on the price ladder. Then I can go and I could like basically just simulate a price range. What is it? 05, I guess. Yeah. So 05. I'll use yen because it ticks in pennies. And so I go, okay, well, what would this one that I sold right here at 2050? What would the 104.94 be worth? If I wanted to buy it back, and it's telling me right now about 15, that's going to fluctuate up and down. Because right now it moved up against the sum. So it's like now if I sold at 26, it'd be worth 15. So if I sold at 20, it'd be worth 10. So you'll see that number be 10 if it drops back down to 20 there. And but we're also bouncing right off settlement, so I want to use caution. If the thing goes X number takes against me, probably will hop out of the trade. So this one's sort of hopping in. I prefer to, like I said, I actually got the signal to get in on the trade at 10.08. So we would have already been in and out of the trade. And but it still could work out. I mean, I'm still getting a confirmation short so far. So we'll see if it doesn't. Could you have traded this on straight futures on the gap seated this morning? I would not recommend it. Simply because, I mean, we're not, like on those trades, we're not using a stop loss. So, you know, I mean, unless you could use a stop loss, but I mean, that's the way you could do it. And maybe you could try to use a 1-to-1 stop loss. So if you're 3 points away, you could have a stop 3 points up and 3 points down. But the S&P could easily go up 4 points and then come on back down, you know, 4 points. So that's where I'd be really careful on using a stop loss on that. I'm trying to, I mean, basically, if let's say the S&P had a 4 point gap, so you said, okay, I'm going to sell now, I'm going to buy back when it fills in the gap, and then, but I got to use a stop loss because I'm on futures, so now I'm going to have to go in and, you know, put something 4 points up. And so if you're going to do that, if you're trying to do this on the futures, you would need to look at hedging, maybe like with the 10 a.m. spreads or something, you know, cheaper spreads. Or, I mean, maybe you could look at a binary that's 4 points out. You'd be, you know, giving up some of your money to do that. But if it just went right against you, so sort of a short-term expiration binary that's 4 points out might be a possibility. For example, you might go in here and go, okay, the S&P right now is trading right around 1832. Just tell that based on the price. So if it's trading right around 1832, then if it moved, you know, 4 points against me, like how much would I make if I bought this? Well, if I bought it for 11 and moved 4 points against me, then I could sell for about 45. So I'd make about $30. You'd have to buy quite a few of those to really make it a hedge. So trying to, it's hard to hedge spreads with binaries. It's hard to hedge futures with binaries. Not that you can't do it. I'm working on trying to figure out some good combinations, but some like consistently good combinations to pull that off. And yeah, so we're letting that one sort of trail on down. See if it keeps going. So we notice on this US yen now that we're back to around where we got in. On the 104, what, 94? And now it's saying it's about $14, and if it, moved down 5 ticks. Now we can always reset that price by going, what's the current market price of 5 ticks down? Because this is walking it at 104.81. If I go to simulator range again, it'll update it to 5 ticks away from where the market's at this moment. It's a good way to see where the market price is. Get simulator range of 0. Guess what the Aussie dollar is trading at right now? If you ever want to know, there's you a nice trick. Where can you find Monday's premium collection seminar? I know we've uploaded it. Let me see. Let me check real quick so I can confirm that for you. I know it's up, but is it in the right box? This trade we're doing USD yen right now. This is premium collection. Direction and price, direction and time are both in our favor. And that's what the predictor and time scalper, right? The combination strategy there. That's what they are. Let me see here. I'll find it for you. Make sure it's in the playlist. Let's see here. But maybe maxing out, I may have to add a new. No, we have more. Okay. We have room. There we go. Okay, so I'm adding it right now. It'll be under the right in the website. Under education. These don't really matter anymore. They're all done. Education, and then webinar recordings, and then bonus webinars 3. It may take a second for it to update. So that's where it'll be. I'll give you the direct link here too, so you'll be able to go right to it. Or just have to wait. There you go. Okay? Alright. So got that updated. Now we need to take our profit, don't we? There we go. All right, so we just made another $10, $11 actually on the trade. So $60 this morning, not too bad. Let's see what else we got going on. I mean, that could have been 60, 600, 6,000, depending on how many contracts you're doing. Let's see here. So the settlement, if the settlement price is below market price, you would buy for the gap. No, Mike, that's completely backwards. No, actually, maybe you're right. No, you're actually backwards. If the settlement price was below the market price, the settlement price is below the market price. That means the market price is above the settlement, and it's gonna get, basically it doesn't matter. Like, to make it really easy for you, wherever the market price is, you expect it to go back to settlement as of open. Okay. So let me open a chart. That's sort of a cool way to set up a gap fill chart. So I'm going to put new chart, and we'll put on Russell. I'm going to add Russell 2 times. This is a sort of a tricky way to set up a gap fill chart, so you can really see it. Okay. I'm going to place both of them just on, we'll just say 5-minute bars. Okay. So minute 5. Well, actually, I'm going to make one of them. Like one of them, it won't let you do 2 5-minute bars. So I'll make one of them 6. It won't matter. Okay. Now, the 6-minute one, I'm going to make transparent. Okay, so I'm going to go to the bar color and learn how to spell the word transparent. Pardon me. So copy that. Paste that. And so now that I have that on there, click. Oh, I want them actually both to be in the same panel also. Okay. 5 minutes. I'm going to use 5-minute. I'm going to use default 24/7. Okay. The 6 minutes, I'm going to use CME Index Futures regular trading hours. So I got 5-minute bars, normal, default 24/7. I got 6-minute bars, same instrument, transparent, regular trading hours. There'll be a reason for all this in a minute, okay? And then, let's see, where is my panel? I'm going to tell this that I want it on the first panel. I want it in the same panel as the Russell, okay? I want these both in the same place. And you'll see why. Now I'm going to click OK. Alright, so I'm going to pull this chart up. We got 5 and 6-minute bars. You can't really tell that we have 6-minute bars because they're hidden. And it's so close to it's a minute difference. And now what we're going to do is we're going to go in and we're going to add the deviation levels, basing them on just the 5-minute bars there. Okay? Because what's the most important deviation level that we need on all this? We need the settlement price. And now we're going to go in and we're going to add in the, let's see, let me find it. Current day, open, high, low. Okay? Now I'm going to get rid of high. I don't really need, I mean, there are reasons why you could use that, but for this purpose, it's not going to help us. Okay, I'm going to make that transparent. I'm going to get rid of low. I'm going to make that transparent. And then I'm going to go down to open. and I can make that whatever I want to. Okay, I'm going to make it thicker. So, or if you don't want to worry about making it transparent, and as Mark pointed out, you can just show it as false. And then I can go up here, and I want to assign this to the 6-minute one. Here's the trick that's happening. Is if I assign it here to the 6-minute open, then what it's going to do for me is it's going to pull out that regular trading hours, the opening at 9:30, on the chart for me. See? Whereas if I tried to assign open, high, low, close to the open on the default 24/7, it would show the open from when the market closed yesterday, like at 6 o'clock. This shows the open from 9:30 this morning. So now what I can do right here, this is like the best gap fill like setup that we've come up with. What I can do right here is literally, there's the open. I can look at this immediately and know how much of, there's a gap. And if I want to measure the gap, use our shortcut indicator we give you. Go over here, and then just grab it and take it down to, try again. Draw. That draws. Okay, well, normally that works. I don't know. I'm not going to worry about it at this very second. I don't know if it's just maybe the... Here, well, let's go to drawing tools. That's weird. Okay, so my roller's not working. I'll figure that out later. Or I could do the old-fashioned way of just, math. And which is 1156.7 minus 1154.5 is 3.2. So, and in this case, it filled the gap. It kept going. Man, some people go, man, that kept going, man. You could have made more money. It's like, yeah, but that wasn't my trade. This is not a trend trade. This is a gap fill trade. Gap fills, I'm done, I'm out. If I have another good trade, hey, I'll take that one. I'll happily take it. Let's see, another potential trade. Maybe we could throw another one on here. Y'all are liking this? Is this good? How much of a gap do you want to see to make this trade? There's a couple ways to put it. One is ideally I want a strike. You basically need a strike to make a profit. Okay? So, at least one strike, ideally 2 strikes if you can get it. But again, let me remind you, like sometimes what will happen is it'll run up and then we may actually be getting it up here. So it's even let's say the gap, I've had gaps before where my gap was a point away, but I got in up here because right here is where I started seeing the market price action dropping down. And then let's see. And then I can add on, there's the time scalper saying it's going short as well. And see, but right on the open here at 9:30, I had a long. And I'm like, I don't know if I want to do that. I don't know if I want to short the gap. I got a long right here. It's moving down. I get a long. Then I get a short. Like, okay. And then, it does a little pullback. But by the time I get the short here, it's too late. Okay? Like, there's just not enough premium. So we're sitting there. We're waiting. Thing pulls back. And then starts breaking lows again. Hey, let's grab it. Yeah, look out below. Broke it, hit it, dropping, going below the lows. Apex is short. What is this thing targeting? Goodness gracious. So Apex is shooting for basically about 1146. These arrows are time scalper. So, yeah, that's the time scalper arrows. The yen just keeps moving on down. But yeah, I mean, you can go and you can just do trade after trade after trade after trade for 15, 20 minutes again and again and again. And you can't look for gap fill trades all the time. The time scalper trades, yeah, those are happening all the time. So, but what we're going to do is we're actually going to filter them out with the predictor. So we're going to use the predictor to determine the direction, and we're going to use the time scalper to determine the entry. So that way you're not just grabbing every trade under the sun and over trading your account. But yeah, it's going and going and going. I mean, you could literally take this until you got a green arrow if you wanted to. So, yeah, you just may want to have a stop loss somewhere along the way. There's a lot. There's a lot of trades. They give you like short, shorts, longs. Didn't really work out for you. Short, long, bought back, break even. Short, long, nice, good trade. Long, short, huge trade, massive profit. Short, long, about break even. Short, long, about break even. Short, short. If you waited, you gave up all your money. Short, short, long, about break even. Short, massive profit. So, so we don't actually have the time scalper released yet because we're having to go in and program like pieces of it to make it stable. Like on my computer, it's really stable. On beta tester's computer right now, it crashes. Another computer, it works just fine. And all three of us have different operating systems. Okay, so we're just having to make sure it's stable. And once we do, then I'll go through and I'll release several different strategies on how to put it together. There's a lot of ways to use it. It's pretty cool. So I'll use it literally just for EPCs. Actually, that's one of the coolest applications. Is EPC Trader. So if I get a signal in the last 15 minutes on it, I'll bust it down. We're in the last 10 minutes. Here we go. So we can look at it. And let's see. So I'll wait to see if I get one. I'm on 2 minutes. Let's go to 1 minute. So I literally just wait to see if I get a signal. If I do, then I have an EPC trade. It could be a long or it could be a short signal, either one. If I want to be ready, I me go over here and bring up my small caps. And I basically say, show me in the money contracts. We'll say reset filters. Let's give me intradays in the monies. Both directions. And there is nothing on the small caps. So now I can't even do an EPC on a small cap. So because the market fell below all the strikes. So there's 9 strikes, and it puts them 1 point away on the intradays, and so it fell all the way below. So you couldn't even do one on it. And we do have one on US yen, so we can look at that. Let's see here, US yen expiring in 8 minutes. Let's see here. 104.78, so 79 would basically be it. I mean, this would be a tight EPC. They are tight. So I will tell you that right now. If you do them, they're very tight. But this would actually be the trade. And some people do not like these trades. So you got, what, 8 minutes. Crap. Working. Yeah, see, it already flipped $6. Bam, bam, bam. Done. Ah, missed it. They're so fast. APCs are so quick. But now if I see it hit like 95 or whatever, I'll cancel my trade, my working order. If it goes up to like 95 or so, I'd probably be looking to get out of the trade. So I'll get stuck in the 2-minute dark zone. And what we've been finding a lot on the time scalper, I mean, the time scalpers, the EPCs, those are scalping trades. But we're going for, you know, 15, 20 bucks over and over again with very few losses. Something else I've learned. This is something it's really simple. And I was surprised I didn't already notice it. But there you go. So now we're in. So now we need a stop loss. The trade. Alright, so now I got a stop loss working on my EPC. That definitely helps out with discipline. Now I got a take profit up here at 95. Activate that. So I got to take profit in, I got to stop loss in. If either one gets hit, I'm out. And I'm okay with that. I mean, that's how those trades work. So, like I said, this was real, like up front, I'm like, this one's really close. We'll see. And these are the ones that make your heart go boom, boom, boom. The time scalper is not so bad. You know, gaps, not so bad. EPCs, your heart's like racing when you're doing these trades. They're not for anybody with a heart condition. So now we got one more thing we got to add in on the virtual stop tickets, and then they'll be ready for release. So we got last piece. So I'm pretty pumped up. But there's only one bug that I found, so we just got to fix that bug. So there it goes. Put it in. We're in the last 2 minutes. There's not like any liquidity, is there, at all? Oh, there it goes back. Okay. So let the trade do its thing. Cancel out my take profit order. Obviously, I'm not trying to get a profit anymore, so I don't need that order on there. And stop filled. So, and done. What I have found, okay, on the EPCs, something that we've been doing a lot more of, is they've been working really well at night with the time scalper. I'll show you an example. I can pull it up here. It's been sort of cool because it's a lot simpler, than having to look through 15 different things. 8 o'clock, 9 o'clock, 10 o'clock, 11 o'clock, all the expirations. You have expirations every hour. If we go in here, I go way back. And it's sort of funny because I was testing this and I wouldn't do these trades normally. They wouldn't follow my normal EPC rules. But if we're looking for 1800 or 8 o'clock would be what, 20? Okay. So okay, so right here, the market's sitting at 98.83. It's telling me sell at 98. It doesn't at 104.83. It's telling me sell at 104.86. And it goes right down, right into expiration. That's in the last 10 minutes. Okay, that's the 8 o'clock expiration right there. So now we go to the next one. Okay, so right here, the last 15 minutes here, EPC. So we got a long right over here, buy 104.78. The market's at 104.81. Expires above 104.81, wins. Look over here. To the 2200 hour. We actually ended up getting a butterfly on it. Okay, we had a buy at 104.88, expired above that at 2200. We had a sell at 104.94, expired below that at 2200. And we got another buy at 104.88. Probably couldn't have got anything because we were 2 minutes away, but it expired above that at 2400. We go down to 2300. And let's see, we got a sell 104.89. That's 5 minutes away. That's 4 or 5 ticks. Might have had a hard time getting a fill on that one. I don't remember what happened on that one. I'm actually sold a little bit closer, but ideally 104.89. Obviously expired below it, right there at the 2300 hour. And then we go to 2345, 2350. So we have a 2340. This was a little bit earlier out, but 2340. So you got to sell at 104.88. Take that to midnight. Obviously expired below 104.88. You got to buy 104.81 strike. I noticed expired obviously above that at midnight. And so it's just, there's a lot less oscillation. I mean, there's oscillation, but there's not a lot of, it's not a lot of massive ticks. So, sort of a cool way. It's EPCs. I wasn't doing at night because you couldn't get any money without them being far away. And the problem is, if they're far away, and we couldn't get them to be really close. And I'm like, well, if that's what I'm going to do, then what good does that do me on the trade? And so, but yeah, it worked really well overall. So right here, and I mean, they work so well that we're literally testing whether or not to even use stop losses, which sounds funny, but I mean, here's an example. This market just expired at 104.78. We sold the 104.79. We got out when it hit 104.79. We took the stop. It actually became a profitable trade. It expired in the money. So, would we be better off just leaving the thing alone? Well, I mean, you got to look at your risk reward. If I'm making 15 or 20 bucks, I got to be right, 85% of the time to make money. So if I am, then cool. But if not, then it can get really expensive. So that's why we look at taking the stops. And so we're measuring stops, without stops, maybe minimum premium. Maybe I want 30 bucks only. So that way I don't have to take a stop. So if it goes up to 30 bucks, then I can choose maybe not to because the percentage is so high, but I have to have the oscillation to get the fill. So all those different pieces put together. Yeah, nighttime butterflies have been awesome. So we just been using the scalper to help us do that. So, but it's really the big key has been in those, last, 10 minutes on there. Let's see here. Yeah, we've tried watching the Nikkei for the U.S. yen. Darby, feel free to, different Darby, not the Darby that what y'all are used to. Feel free to send me any information that you're seeing on it. I'm just not finding a consistent enough impact. So, but I'm definitely all over the news. But the news has been having a great. Obviously, the news you have to be aware of on all these trades. So a lot of times I just won't do the trade. If there's news happening, because it's not my normal. I want my normal little oscillation, not the weird pop. So even like just news I might be aware of news, I'll back off for like an hour and then I'll come back after it's over. Samuel, heartburn, yeah. Let's see. Can you go over a question I have on V-spikes? Okay. So, image posted here. The 10-minute spike appears on bar 1 at 10:20 a.m. The actual spike and spike alert is on bar 2 at 10:20 a.m. Well, bar 1 and bar 2 can't have the same time. But here, let me get a marker. We got bar 1, we got so on this, I'd be waiting on a break. It wouldn't even matter what bar you're looking at because you'd be making a within 3 bars of the bar you're looking for a breakout of the low. So whether it be bar 2 or bar B or whatever, bar A or bar B, it doesn't matter what bar you're talking about, it has to break the low. Didn't break the low 1, didn't break the low 2, didn't break the low 3, didn't break the low 4. It has to break. Whether you're, like I said, whether you're using your bar A or whether you're using your bar B, in either case, none of the subsequent bars broke those bars' lows. See what I'm saying? It's all like it's triggered on breaking the low of that bar. Yeah, I'm only taking them on 5-minute entries. That's correct. But it doesn't. But that doesn't apply to your question. Because there wasn't a trigger. Within 3 bars of bar A, it didn't break the low of bar A. Within 3 bars of bar B here, it didn't break bar B. So either way, you know, no V spike. I mean, it would have eventually worked because it went down. There's your volume spike. Now, one thing we are working on is displacement of the V spike to maybe help out with the question that you're asking specifically. I can show you what I'm talking about. Let's see, you have what, pound dollar up. All right, let me flip over to pound. Five. Over here. Not sure if I'm doing that right, but what we're trying to pull off is it'll actually move it forward to let you know when it happened. Basically, think about this. Like, if this is a V-spike on this bar and this is a V-spike on this bar, see those two lightning bolts? That's going to be the bar where you're going to start from. So, but we're going to, I know Mark sent me one, and I'm just trying to find the newest one he sent over. Maybe I haven't done a refresh on my Ninja. Give me 1 second. I think I understand your question here. So just give me 1 second. Basically what you're saying is, like, where do I start counting the 3 bars after the 15-minute bar spike happened? Was plotted almost in essence like backwards on the 5-minute bars, because it was plotted at the beginning of the 5-minute bars. Is that sort of what you're trying to figure out? Okay, I got 7B version in here, Mark. Got the parameters up. And then we're adding in the displacement. When it of 3 or negative 3? Offset. Okay, there we go. That's what it was. All right, so check this out. Here's the idea. Let me add in, I'll type in the 5-minute indicator so you can see what I'm talking about. But if I add it in, that's not really going to be the perfect example of this pound. But what it's doing is it's plotting like 5-minute right there, which is the bar after the V-spike happened. So like where this wording is, 5-minute. And so therefore 3 bars after where the word is, that's actually where I would count the 3 bars from. So what we're doing is we're making it where it has like a 5, a 10, a 15 displacement. But I moved all 3 of them. So the 10-minute one, you know, it happened, you know, right here, 15 right here. So, but we're playing with that. So basically what it'll do is it'll fire off over the basically the 10-minute bar will fire off over the 5-minute bar of where you're supposed to be counting your 3 bars. The 15-minute bar will fire off over the 5-minute bar when you're supposed to be counting your 3 bars. So we're adding in that. Like this is why this stuff isn't out yet. Because we have to go through and You know, it makes sense to us, but does it make sense to everybody else when they go, okay, wait a minute, that's a 15-minute bar, it just closed, it plotted back there, where do I start counting my bars from, and start going forward? So, on this one. So, ultimately, basically, what I'm looking for is where did the volume spike happen? The bar after that, 3 bars later. On the 5 minutes. So, basically, it's always going to be 15 minutes after. You know, on a 15-minute bar, I'm looking at 3 5-minute bars after that bar. 10-minute bar, 3 5-minute bars after that bar. 5-minute bar, 3 5-minute bars after that bar. Where I have a confirmed V spike to do that trade. But it's a pretty simple trade, and it works really, really well. All right. Cool. Glad I got that one answered for you. Mike, time scalper setup. Is this a indicator? It will be an indicator. So it's coming. So again, we got to make sure it's stable and everything. It's not as quick as, because our stuff is not. I don't know, there's more complexity to making sure it's stable across every platform. I can go into a whole lot of programming reasons that the programmers give me that makes me go, I don't care, just release it tomorrow. I'll deal with the crashes. But not really. So it just takes a little longer to get it right. But plugin, like I said, we have one bug left in the plugin and it's done. It's ready to go. And let's see. Okay, well, I think that's everything. We got we got a good little selection. We got some scalp trades in. We got some, gap fill trades in. And I mean, we sit here and do all these all day. But, biggest lesson today, I think, was just learning how to use the scanner to, whether you're doing a gap fill or whatever you're doing, if you're targeting a deviation level, if you have a price level you're determining, if you're doing a news trade, whatever, and you have a price level you're going after, using that simulator to help you really find the best possible strikes for your risk reward, and having that set up so you can monitor. I mean, we were able to, instead of clicking 25 times, I mean, the most clicks I had to do is back and forth between my deviation levels, right? But instead of doing that, we just put our price in, and we were able to scroll up and down between the S&P, the NASDAQ, the Dow, the small cap. We were able to immediately rule out the NASDAQ and Dow because they wouldn't make us any money. The S&P was okay, but the small cap had 3 good choices. And so we chose the small cap. We went with that. We were able to execute the trades. We were able to use a limit order on one of them. We were able to use stops on the other 2 with the new plugin that's coming. So that way we didn't have to be perfect at picking how, what is an in-the-money binary worth, what is an out-of-the-money binary worth. We just let it take care of itself. But we said, hey, if you're going to do this, don't do it worse than this price. And took care of it for us. And, of course, a little sneak peek preview on some of the stuff that we're hoping to release here in the next week or 2. But yeah, try to bring y'all something a little bit different, a little bit new, and sometimes it's even the same thing, but it's building upon, it's tips, tricks, etc. on all the different strategies. So today was what I did this morning, where I went in and I picked out all that stuff on the gaps. That's something that you should probably be doing at 8 o'clock in the morning. Okay, because you know what your strike's going to be, because you know what your settlement is. All right, so at 8 a.m. in the morning, that would be the time to put that stuff in. Doesn't mean you're going to use it. That'd be the time to go in and stick in the simulator that price, and have your 4 indices up, watch them, set up that chart like I showed you, where I showed you to do the 2 data series. One of them's 5 minutes, one of them's 6 minutes, one of them's transparent. Add in that open, high, low, close indicator. Turn off the high and low, and then just have just the open assigned to the 6-minute one that's on a regular trading hour session template. Then add the deviation levels to the default 24/7 data series, and so that way you can easily identify gaps first thing in the morning. I mean, just with a click, so they're visually right in front of you. So right there, there's a gap on the Russell. And then you go over here. What about the S&P? On the S&P, there's a gap on the S&P. Go over here. What about the Nasdaq? There's our gap on the Nasdaq. What about the Dow? There's our gap on the Dow. You can see it like right there, right in the open. Bam. We got our gap. So you can see actually by looking at this chart why we didn't get a trade on the Dow, because as soon as it opened up, it went straight down. Like there was no chance at all to be able to even get in on that trade. So yes, today's webinar is recorded. I will load it up under Thursday, under education, webinar recordings, Thursday AM webinars. Let's see here. Any other questions before I wrap up the webinar? All right, looks like everybody's got pretty much everything we went over covered. It wasn't anything that's new rocket science, but yeah, you can do the gap on crude. I mean, I'll tell you right now, Mike, I really don't, and I'm not saying honestly, I haven't really just tested it heavily, but you go back and look and to see, is there. My thing is there a logical reason for the gap? Okay, so yeah, today we had a gap. All right, boom. Gap right there on crude, filled in. That's awesome. Yesterday didn't really have a gap. See the open settlement, same thing. Day before that, had a gap. It didn't fill. It just went straight up. Before that, had a gap. Didn't fill. Went straight down. So I usually don't trade gaps on commodities. The issue is on commodities, they're trading all night long. Oil is oil is oil. The thing on the indices is the stocks are not trading all night. The indices are mirroring those stocks. Those stocks are not open. The stocks are shut down. So when they do open, there's a ton of stock limit orders in there, and all of a sudden the indice is off because it's moving because of currency fluctuations. It's moving because of other international indices are moving, and that's why it will more often than not go back and fill in the gap, because there was something else beyond it, like that, something that it contains that was not trading. So now another gap that I have talked about, worth looking at is you can check out like FX gaps on Sunday. So because FX was not trading and it gapped, so that actually would be something you could take a look at. But it has to be big enough. Why don't we get more gap fill trades, etc. Again, it has to be large enough on the trade. Right here, I mean, that gap did fill. I mean, it flew down. It was a crazy day yesterday. Flew down, flew up. Looks like something got messed up on the indicator. Let me go back to that. Volume, Let me check my data series. I think my data series now is like default 24/7. Let's flipping around instruments. No, it's CME, regular trading hours. That's weird. No, crude oil opens on Sunday. It doesn't open on Monday. So, and Nadex isn't open on Sunday for crude oil. It didn't open until like 3 a.m. And even if it did, you wouldn't want to do it because you have like daily binaries and weekly spreads that are way away, so the implied volatility or time value is very, very high. Let me get rid of this, reapply it, so I can show you this. But anyway, so yeah, we'll and if you just really want to see him, you don't want to see him coming, I mean, something else you literally can do is you can go and you can change this to CME index futures regular trading hours, and then now it'll literally just show you open to close. So over here, like we had a gap up, it filled. Over here we had a gap up, it filled, but it was really small, so like it wouldn't qualify. Okay. Over here we had a gap up, but notice how we never had a retracement. It just was up, 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 up. So we didn't take that gap trade. And then I can load a few more days. Let's see here. We'll load in like 20. Look at that indicator, that open indicator only plots so far back. Oh, my data says I got to load 20 on both. There we go. What little stupid settings. But so yeah, right there, that gap did fill. So it went up, it finally started heading back down. Filled in. So if we restart, gap filled, restart. This gap did fill, but was really small. This gap never looked backwards, so we didn't have any confirmation. So we waited on confirmation on today's. Over here, this market, wow, it gapped up and it just shot straight down. Easily may have missed that one. It was, I mean, it was just lightning fast. This one went up, and then we got some confirmations on some shorts. It did shoot down. That let us get a better fill. So I mean, there's a lot of these that you can do. Whether or not you're going to do them all. This one right here went down. It did shoot up, but it didn't fill. But it also was, I mean, it was down a lot. So you can play with this. You can look at it. You can see how many fill, how many don't. These were too small. That was too small. That one, I never got a confirmation soon enough that I liked on it. People was asking, like, why don't we always send them out on P3? This one did fill. This one was too short. This one was too short. So sometimes they're too small to be able to do a gap fill. Sometimes by the time it does get back to the price, we'd like to take an entry. The risk reward isn't good enough, so we can't take it. Or sometimes it's too big. Sometimes it just goes the other way. So basically, we got to have all those pieces put together. Not quite sure what your question is, Kelly. I mean, I'm looking at size. I'm using things like, time scalper, whatever, to help me in determining direction. Volume spikes, which you currently have access to help out with that for reversal in direction. And can't be too big, can't be too small. I mean, there's a lot to the gap trades. It's one of those, like, we'd have to do to really go into it and make sure you were thoroughly educated on it. We'd probably be talking about a solid gap only 4 to 8 hour webinar. So, because I would want to, if I was starting off, if I was going to that webinar, I'd want to make sure everybody understands what a binary is and how to trade it. And then we go to what a gap is. And then we go in, okay, how do I qualify and disqualify gaps? And then, how do I execute them? And what do I use to determine whether to get in and when to get in? Do I get, like, I don't get in, like, the first, I used to get in, like, on the open. But that ruled out a lot of good ones that went back a little bit and then came back. But also, like, we ended up getting in ones on the open that just went straight against us. So, like, right here, you hop in, and then market's just like boom, 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 boom. Like, we got in, like, right here. We could have. So we're learning, okay? But market opens like right here. Like, oh, there's a gap, and there's enough distance I can make a profit. So I'm gonna go short, and then all of a sudden it's just like, bam, straight up. So okay, we can't just take them just because there's a gap, even though the majority of them do fill just because there's a gap. What should we do to increase that profitability? And so one, it's increase our probability by not taking ones that don't move in our direction. Be willing to miss out on a few that move in our direction fast. And also increase our risk-reward ratio by allowing it to move a little bit up and then start pulling back before we hop in on the trade. But I mean, yeah, maybe Darby, something. Maybe we do an intro webinar. We do like a special promo intro webinar or something like that. And access, or in something you can do. I don't know. We'd have to figure out how to work out an idea on that. But we give a lot away free. At a certain point, there does have to be services. So we're actually about to make the scanner free as well. So can only give so much away free. We got to pay for all these programmers. All right, I think. But yeah, Kelly, and that may be we may do a big gap. A gap webinar. I just got to figure out how to put the entire thing together. So, it's sort of like, it's just, there's more to it. So, it's simpler than there's simply a gap. And there always, right? Like, as simple as it is, there's always, there's always 5 more steps. So, cool. Well, I'm glad you got it. Yeah, I know, right? And, but there's some cool things we're learning. We're going through and just step by step as we're fine-tuning our own strategy. I'm trading this stuff. I'm not just, as y'all know, this is, our education, like we do like this, is free. I'm just teaching you the things I'm learning as I'm doing it along the way. And teaching it to y'all as I grow as myself as a trader, or as y'all share things with me. So, but anyways, y'all have a great day, and make sure you hop over to our website if you're watching this. Maybe you're not a member. Maybe somebody shared the link with you. Hop over to the website, and we got all sorts of stuff going on over here. But this is our new Nadex trading pit, by the way, which is pretty cool. We just added this in, and this comes free right now with P3 and free with Elite. Pretty soon we're thinking about having a Nadex Essentials package, which will have like the pit and the plug-in and the deviation levels, but not necessarily the signals. But if you have questions, hop over to the trading question forum right here, and under this you can go in and you can post questions. Post comments, post whatever. Some trader just posted trade, performed a successful, expiration premium collection trade, went in, did it. So basically saying, hey, I did a good job. It's just something I should pay attention to. I like this, because what he's doing is he's saying, I did a trade and it worked, but is there anything I can improve upon? And versus just saying, I don't want this to be lucky or random. So how can I improve upon this? So then he went in and he posted a chart. No, it's not working. I'll have to let him know. But he tried to post a chart. Let's see. Let's see if it just didn't copy it for him. Yeah. But anyway, so he tried to post a chart on there. And so I'll have him repost that. But you can go in and you can post stuff and, you know, put questions in. We added a whole new scanner section. We're building this up right now for the Nadex scanner. So, like, you know, we're going to add in trading documents and questions. So we already have general questions, general tech support. I made 3 short videos on installing the plugin. Obviously, as soon as we release the stop plugin, we'll put it right there. You can see what other, you know, things people have had over here. You know, like most recent post. So you can also go under newest form activity. Is what I do every day, and you can see everything that's been posted, like here, you know, recently, maybe that you missed out on since the last time you logged in. And so if I'm really trying to find all the posts and catch up, this is what I do. So I'm like, wow, there's about 15 posts I haven't even read yet. So, yeah, on the Elite, it's free. We give you two week trials, so it's free for 4 weeks, and that might be the solution for you if you have a small account. You're trying to get started. You're trying to learn. Now, I mean, it's a lot to learn. Okay, I'm not going to tell you you're going to learn it all in like a week, but you can hop in. And what I tell people, if they have a small account and they're learning Elite, like they only have $500 or $1,000 in their account. You're not going to make a fortune, okay? I'll tell you this right now. But doing what I'm about to say. But you can go and you can trade the NASDAQ spreads, okay? Basically, they have like a lower leverage. So when the NASDAQ moves 10 points, they make $10, okay? Whereas if the S&P moved 10 points, you'd make $100. Okay, but if it moved 10 points against you, you'd lose 100 or whatever, right? So you can trade on really low risk and, you know, make some decent profit and learn how to trade. This is a very safe way. You can also do the same thing on silver. You can do the same thing on copper. Copper doesn't usually require an extra data subscription, but these are ones that you can trade with pretty low risk on and get started. So that might be a good place for you to get, you know, 4 weeks of education, of live trading room access, learning how to trade spreads and binaries on it with a very small account. You know, or, I mean, I have some traders come, they just trade CFDs, or they trade mini lots on FX, like, which are $1 a tick. So if you're trading mini lots, you could do that. You could also do mini lots and hedge with the spreads. I mean, where you're talking about risking, you know, if we did a hedge right now on euro dollar, okay? And let me just drop off the metals. If I did a hedge on euro dollar, I mean, that's a $5 risk trade right now. Okay? I can do a $15 risk trade and only have 4 ticks to break even. So, I mean, that's not bad. But, I mean, you can risk really low amounts of money. You know, $3, $4, $5, $10. And I actually have unlimited upside. So, I mean, if you get a 60-pip move, you can make $60, but you're only risking $5. So, you know, that's definitely worth something you might want to start looking at. You combine that hedging strategy with Elite, and then you have some basically good low risk strategies for starting out, and you get 4 weeks to learn it. So that might be one of the best ways for you to get started. So the current Elite membership currently includes all tools that we currently offer. So, like, that statement would be accurate. It will include the plugin as well. So, you know, there may actually be some tool at some point that is separate. You know, I don't know. It depends on what my cost is on everything, put everything together. But Yeah, the elite membership includes all the tool. Like we're actually giving you even like the diagnostic room. You know, the trading pit room. Right now for free, it comes with the elite membership. So as soon as you have to have a paid one to get access to it. You can't just. I mean, there's signals in there all day. People would be like trying to like sign up for fake accounts and just keep getting access to that room. But once you have a paid elite membership or a paid P3 membership, you get access to the trading pit room, and you get access to all the indicators that we currently have, and you'll get access to the plugin, the stop plugin for Nadex as well. And let's see, just going through, trying to see if there's any questions I missed. I don't want to miss questions. That's so annoying when you... If I have missed your question right now, like, please repost it, okay? So I'll give you just a couple minutes. If I've missed any questions you have. Kelly, what do you click for what? To get the free trial on the Elite, it's under Home, where it says Elite Member. Then once the page loads there, click free trial. After the 2 weeks are up, you can click it again and get a second free trial. Oh, to see all the new posts in the forum, under Trading Question Forum, then forum links, newest forum activity. And then, yeah, you can see webinar schedule. Obviously, we built that in. FAQ page we haven't really totally cleaned up yet because we're building this whole video plugin thing right now. But once that's done, we'll add that in. But the video plugin thing is actually, it's pretty sweet. I'm excited about it. Let's see here if I can even find a. Example, we would have one in. Let's see. Yeah, if he doesn't have it on here right now, he's pulling stuff off, putting stuff back on. But what it's going to do is it's just going to show you like little icons right here of when stuff is new. If you favorited it, if you marked it to rewatch it, if we posted an update to it, if there's one like in that sub forum, but you'll be able to click on the sub where it says videos. So you'll be able to see, you know, what videos are in this sub forum. Like these right here have videos in them, and it'll tell you that. So, but it'll be pretty cool to have the threads and the videos, and you'll be able to find the videos quickly. And then there'll also be a 2 new buttons we'll be adding on. One of them will be like videos by topic. So you can go up here and it actually like, so you could go videos by topic and then it'd have, you know, binaries, spreads, futures, Forex, Ninja Trader, you know, whatever. And then we're going to have videos by like learning path. So I want to master EPC. And so what I do is show you, here's all the prereqs you need to watch. Here's the main lesson. And then here's some post follow-up videos, like webinars I did on that, or radio shows I did where I covered that topic. And so that's, we're hoping within a couple weeks we'll have it done to beta, and then we'll release that out. So, make sure you're logged in. Are you logged in, Kelly? You don't see that right there? So it says, welcome, your name, webinar schedule, forum links. You don't see that link? So it's not under like the questions form, it's under a questions form, then forum, newest forum activity. But I mean, that's a cool one, is for keeping up with stuff. I mean, there's also, when you're just on the home page, and this is a menu, by the way, people like forget this, they don't notice this. But if I'm over here and I click on, like, I'll show you an example. This is where people get, like, they totally miss out on this whole thing. Right here. So I'm in a menu. There's actually a menu up here. You can trace the menu backwards. And this is just really basic stuff, but people miss that all the time. So, the newest threads that were started, like newest comments, questions, whatever, that were posted, are right here. The newest post, which may be part of a new thread or an old thread, will be right here. So that's a quick view. And then but if you want to see everything beyond that quick view, you do that. Also, if you want to widen stuff up, you can shrink that. You can expand, everything out. There's a lot of little buttons on here people just never play with. You can get rid of that. I don't really know if there's a reason to do that unless you're shrinking it out. But so there's a lot of little buttons on here. You're not going to break it. And see, like, where the X is, it like says, am I subscribed to this forum? So if I subscribe to a forum, then this is another thing people rarely take advantage of. But if I subscribe to a forum, so like right here, let's say I'm subscribed to like the psychology forum, I can tell it to email me, maybe once every day or once a week, or only maybe in a notification on my control panel, like up here. So, but I can tell it to actually send me an email every time there's a new post in that forum. And then, but maybe I want only a subforum. Maybe I don't want the entire thing. Maybe I'm only interested in new questions posted on, news trades. So I can go to the news trading one and actually, subscribe to this forum. So I mean, I know I'm a moderator, but y'all have other tools. Like right here, I subscribe to this forum. You can mark the forum as read if you've already read everything in it. And there's some other, like just basically look at the menu, see what there is, and if you want to start a new topic here, if you want to reply to a question here, if you want to search for a topic here, if you want to use more advanced searches, click the advanced search feature. I guarantee you, probably 1% of people have ever seen the advanced search feature. Keywords, you like post by a certain person, whatever. So there's a lot of little things in here. So it's just, you got to stop and look. You can set up your profile. You can add an icon. You can tell people about yourself if you want to. So you can fill all that stuff in. You can friend some other people on the forum maybe that you like to follow a lot. Like Brad, I know he posts a whole bunch of stuff, and he's always going through and testing a lot of strategies and posting stats and everything. So, but you can see, any comments, questions, personal questions, everything in there. So there's basically, I just encourage you to take a few minutes and play with the buttons. All right. Well, y'all have a great day, and I will talk to you on the next webinar. So we'll have another webinar Monday. I'll get, as soon as I get the link from Nadex, because they're hosting the Monday night webinars, I'll post that up. It'll be 7 o'clock Monday night, so probably check somewhere around 12 or 1 o'clock in the afternoon. And I'll put that link up. And then I'll also put the link up for next Thursday's webinar. And we'll keep rocking up. Y'all have a great day.